Hello, my name is Michael Council, and I'm doing the company Harley Davidson. This is for strategic management and Professor Curtis Beck, Concordia University in Nebraska. All right, this is a table of content, basically telling you the order of the PowerPoint presentation. And of course, we have a conclusion. Company background. The company started out of a shed in Milwaukee, Wisconsin in 1903. It was incorporated in 1907 as Harley Davidson Motor Company with the ticker symbol HAL. The motorcycles were used in World War I for various regions, such as delivering resources or actually being used to fight in the war. The company merged with American Machine and Foundry in the 1960s, but was sold back to the family members in the 1980s. They currently have over 1,400 dealerships in 90 countries. William S. Harley was 22 years old, and Arthur Davidson was 23 years old when they founded the company. Background information continued. They have two segments, the motorcycle segment and the financial services segment. The motorcycle segment basically deals with the V-twin engines that they had since incorporation or since they started the company. In 1957, they had a Sportster, which was introduced into the market. And then the 1980 to 1990 models include the Softail, FLT, Road King Electric Glide. And then the financial services provide wholesale and retail for refinancing and insurance to HD dealers and riders in the U.S., Canada, and international markets. The company vision, they have two visions. The sustainable vision statement is to preserve and renew the freedom to ride. The values and strategy statement is HD Incorporated is an action-oriented international company and a leader in its commitment to continuously improving their mutually beneficial relationships with stakeholders. The company mission statement is to fulfill dreams through the experiences of motorcycling by providing to motorcyclists and to the general public an expanded line of motorcycles and branded products and services in selected market segments. The competitive strategy consists of two integrations: the vertical integration, which uses backwards integration to maintain control over the quality of suppliers. Well, HD own most of their distributors, so they incorporated backwards integration under the vertical integration. Horizontal integration seeks ownership or control of a firm's competitors. HD acquired Boel Motorcycles and Eagle Mark Financial Services to create new product lines for their customers. Code of ethics include fair employment and respect among colleagues, accurately reporting to the Securities and Exchange Commission and New York Stock Exchange, and providing safe, clean, and productive work environments. Financial code of ethics states that they avoid conflict of interest with company transactions, they have fair and accurate disclosure of information, and they respect the confidentiality of information they acquire. Company business model, basically the value chain analysis. It shows what the company is doing to bring value into their firm. Firms monitor their prices and costs to ensure competitiveness. HD has high quality motorcycles, and their competitor Polaris experienced recalls which startled their investors recently. HD's valuation offsets Polaris's better dividend that they pay their shareholders. 5 force analysis. Rivalry among competitive firms. You have private rivals, foreign rivals, and domestic rivals. The threats of new entrants are moderate force due to being well established and having a high cost of brand development. New firms can enter the market and achieve similar benefits. So threats of substitutes is a moderate force for product availability, switching costs, variety of substitutes. HD resources are durable, sustainable, aggressive, attractive, and safe. The bargaining power of suppliers are weak because HD owns most of their suppliers. Bargaining power of consumers is a moderate force because of the switching costs and the variety of products that they offer, and customers have more informed purchasing decisions, especially with technology. Strategic group map, the key differentiating characteristics. HD is known for the luxury bikes and apparel, and Polaris is known for their sport bikes and off-road vehicles like ATVs and four-wheelers, and dirt bikes. The external factor evaluation uses opportunities and threats to summarize and evaluate their existing competitors' information. The top 10 opportunities are used and the 10 threats are used and weighted from 0 to 1, with the average score of 2.5 being the middle and the highest score of 4.0. The analysis shows that HD score is 2.64, which means they are above average. They have an above average response to existing opportunities and threats, but they still have work to do. The SWOT analysis uses strengths and weaknesses. Well, they categorize their 4 types of strategies: strengths and opportunities, strengths and threats, weaknesses and opportunities, weaknesses and threats. The strategies are stated quantitatively and are specific, actionable, and divisional. Strengths and opportunities include reduce emissions and waste, ship more products, and increase product mix. Strengths and threats include training riders, increasing customer awareness. Weaknesses and opportunities mean better health care for their employees and discounts on international shipments. And weaknesses and threats include the manufacturing of all electric bikes to reduce the emissions going into the community. The CPM, Competitive Profile Matrix. Competitors' strengths and weaknesses are analyzed and weighted 0 to 1. They include the internal and external critical success factors based on their importance. The weights are assigned based on the importance of each factor of the firm's successfulness. HD score 3.26, Polaris 2.68, and Honda score 2.38. The performance shows that, well, the analysis shows that HD and Polaris are performing above average, and Honda is performing slightly below. HD is the most competitive company between it, Polaris, and Honda. Internal factor analysis, the opposite of external factor. The IFE, they evaluate and identify strengths and weaknesses, and then they give all the strengths 3s or 4s, and the weaknesses are rated on a 1 or 2 basis. The total weighted average score ranged from 1 to 4, with 2.5 being the average. The analysis shows that HD's total weighted score calculated to 2.76 because of their reduction of waste efforts and the variety of products and the way they're involved in their community. The BCG matrix, Boston Consulting Group, enhances multi-divisional firms' efforts to formulate strategies. As mentioned before, HD has 2 segments, or 2 divisions. The motorcycle segment, which had an industry growth rate of -0.004, but we rounded to 0, and financial services segment with a growth rate of 21%, but rounded to the highest percentage possible, which is 20%. Space matrix uses a 4-quadrant measure tool to indicate the appropriate strategy for firms. The internal and external factors are analyzed to determine the average company position. The financial position ended up with a 4.2 because of the leverage for liquidity, working capital, cash flow. Competitive position ended with a 1.8, stability 3.2, and industry position with a 4.6. Again, if we look up here, financial and competitive positions are the internal, and the industry and stability positions are external. Quantitative Strategic Planning Matrix, QSPM. They require 6 steps to develop a matrix. Determines relative attractiveness of the multiple strategies based on capitalization on or improvement of key external and internal factors. 1 strategy, 2 strategies were analyzed. The 1 strategy was to add 5 female-friendly bikes to product mix, which brought the total attractiveness score to 5.06. Strategy 2 is to add 10 new full-service dealerships worldwide with a total score of 4.82. Financial data, we got the operating profit margin, amount of revenue HD made in each dollar decreased by, on each dollar of sales decreased by 2%. Net profit decreased 1% per year. Diluted earnings per share stayed at a steady rate of 3.82, even though it dropped and rose a little bit in 2016, 2015. The return on assets decreased by 1% per year. Return on equity the company generated about 37 cents for every dollar that was invested. The current ratio is about 1.36 for 2016. Working capital, the current assets exceed current liabilities, but decreases over the years. Total debt to assets is about 0.82. The HD finances its assets with too much debt. Debt to equity is 2.43. Again, the company finances its assets with too much debt. And long-term debt to equity ignores the short-term obligations. And again, 2.66 means the company is using a lot of debt to finance its assets. Financial data, days of inventory, HD motorcycles and related services sat in inventory for 55 days. According to 2016 data, inventory turnover is sold 6.6 times. The company is managing inventory well. And the compound annual growth rate was negative 4.1%. It's kind of steady right now for 2016's information. Strategic performance, organization performance compared to domestic competitor Polaris. HD has more market capitalization, institution owners, and fund owners. HD's price to sales and dividends yields are performing above industry level. Financial data continue, days of inventory. All right, recommendations, ethical standpoint, background checks and screenings before selling super toners to customers. Repeatedly check pollution levels and update information. Oil pan light to inform customers when oil needs to be changed. And a kill switch activation when motorcycle needs maintenance. Financial standpoint, incorporate sport bikes to increase profits. Include more women and young generation apparel and bikes. Increase growth rate with international awareness of products and services. Complete safety training to reduce liability expenses of the company. 2017 forecasted information based off of the 2014 to 2016 information. Everything increased to help the to help the business become more profitable. Operating margin went to 20.49%. Net profit margin 16 to 50.54%. EPS 3.90. ROA 9.96, return on equity 39.82%. The current ratio would be 1.5. Working capital $1 million. Total debt to asset 0.6. Debt to equity 1.9. That decreased because we don't want to finance with too much debt. Days of inventory went down to 50. Inventory turnover went to 8.05 from a 6, and compounded annual growth rate went to 1%. Strategy review and evaluation. Basically, we benchmark to determine the effectiveness of the firm, compare expected results with actual results, and take corrective action so performance conforms to created plans. HD recommendations: implement the safety training to decrease casualties, implement the kill switch to decrease accident rates, offer trial periods for sale of sport bikes. If sales increase, companies should reevaluate their product mix to include sport and luxury bikes. So in conclusion, we found HD was founded in Milwaukee. The company was incorporated in 1907. They currently have 1,400 independently owned dealers. Value chain analysis gains and maintain competitiveness through use of activities. HD is more valuable than Polaris. Even though Polaris pays more dividend, HD controls their suppliers. HD uses horizontal integration to acquire Boel and EagleMark financial services. HD uses backwards integration to maintain control over the quality of suppliers. HD needs help following their own code of ethics. We see that. File force analysis examined private, domestic, and international competitors, and it discovered HD is a major competitor. Strategic group map is differentiated HD's luxury bike and Polaris sports bike. The EFE matrix has above average weighted score of 2.64. SWOT analysis quantitatively tested specific, actionable, and divisional strategies. CPM compared HD to Polaris and Honda, but HD is the best with the 3.26. IFE has above average weighted score of 2.76 because of their strategies. BCG determined growth rates for motorcycle and financial services, same another company. Motorcycle was 0%. Financial services got a 20%. The space matrix analyzed financial, competitive, industry, and stability position of a company. And we see the results here. QSPM Completed a SWOT analysis on 2 new strategies, which were to add 5 new female-friendly bikes and add 10 new full-time service dealerships by the end of the year. Financial data indicates company is improving in some areas but digressing in others. Company is financing with too much debt and has a high inventory turnover and earnings per share. Harley Davidson is strategically performing well against the competitor Polaris. They're below average on price to earnings, price to book value, price to cash flow, but above average in price to sales and their dividend yield. Recommendations again are the background checks for super toners, continuous observation of pollution levels to make sure they adhere to regulations, oil pan light for oil change to avoid liability for accidents and casualties, and a kill switch when the maintenance is overdue. Conclusion is forecasted ratios and financials. All 2017 information increased or decreased to make HD more profitable, and the strategy review and evaluation to use benchmarks to determine if the strategy is working or not. And HD uses their 10Q report to review current practices. To review current practices, they examine underlying basis of a firm's strategy, compare expected results with actual results, and take corrective actions to match performance with the plan created. They provided more safety measures such as training and kill switches and a trial period for sport bikes. These are the references that were used. And thank you for watching my presentation. I do appreciate it. Have a great day.